Alright everyone, Cowboy Trades here. Welcome back to the channel for another update on Bitcoin. So despite all odds, despite the fact that Bitcoin closed a weekly candle beneath the 200-week moving average, despite the fact that the total cryptocurrency market cap closed beneath critical resistance, and the altcoin market cap closed a weekly candle underneath this level of resistance, Bitcoin has seen a major pump of 13%, and in the lower time frames, we've broken to the upside of this falling wedge pattern. So in the lower time frames, I was wrong regarding the recent breakdown on Bitcoin. However, what has changed in the higher time frames? We're going to discuss what's happening in the lower time frames, what are my short-term bullish price targets for Bitcoin, and exactly what I would need to see in the higher time frames for Bitcoin to let me know that the bear market lows are in. Now let's dive right into the content. So in the lower time frames, you can see that the trajectory of the markets has changed. If we are looking at Bitcoin, you can see we topped out at 31,000. We were making highs, we were making lows, we were making lower highs, lower lows, lower highs, lower lows, and with the pump in the past few days or so, you can see that we've broken this trend, we've broken this lower high, and we're pushing up to the upside. So in the immediate short term, what are my price targets? Well, from a technical analysis perspective, we have broken to the upside of this falling wedge pattern. Now, the technical price target of this is the top of the wedge all the way up here at 31,000. Now, this doesn't necessarily mean we can push up to as high as 31,000. We do have resistance coming in at 29,980. Let's just call it 30,000. We've got resistance at 30,000. If we do manage to clear that, then yes, it is possible. Bitcoin could push all the way up to 31,000. If we're coming over to the total cryptocurrency market cap, you can see we have been forming this falling channel and we have broken to the upside of this as well. Now, just before we talk about the total cryptocurrency market cap and the altcoin market cap in the higher time frames, in the lower time frames, I also want to update the DXY very quickly. We've been looking at this fib channel parallelogram over on the DXY. You can see we had a huge tear to the upside on this. We broke all the way back down to the 618 Fibonacci, and we have not held this as support. We broke down lower, and in the past 24 to 48 hours, we have flipped the 618 Fibonacci as resistance, and we're looking pretty bearish for the DXY right now. It's looking like we're moving back down to the downside. On the 4-hour time frame, you can clearly see that we have a bear flag and we are breaking to the downside of this. Now, if we do take the price target of this bear flag and look at where the DXY could move down to, you can see the DXY could move all the way down to 100.7, and if we're looking at the daily time frame, this could potentially mean that we are losing this 786 Fibonacci support on the DXY, and the DXY is definitely in danger. So from a divergence perspective, I will be talking about some divergences that are happening with Bitcoin, the options market, and the bond market, and global market liquidity a little bit later on in this video. But in terms of the DXY, specifically DXY and inverse Bitcoin, you can see these are moving in tandem. What we've done with this orange line here, which represents Bitcoin, is we've inverted it because we know there's an inverse relationship between BTC and the DXY. So if we invert Bitcoin, we've got a linear positive correlation between Bitcoin and the DXY. And as you can see, inverse Bitcoin is breaking down, and this is breaking down in tandem with the DXY, which is breaking down. So if the DXY gets continuation, Bitcoin can definitely push up to the price target of 31,000, which I told you is a possibility in the immediate short term. Now, in the higher time frames, while the total cryptocurrency market cap is leaning short-term bullish with this breakout, we obviously do want to see a daily close above 1.1 trillion if we are going to get continuation. On the weekly time frame, if we do zoom out, there is a possibility that this is just another ebb and flow back up to the upside. This is a possibility that we are breaking out of a bull flag right now. I do also want to highlight, though, we are steadily approaching this red box. In fact, if we come over to the daily time frame, you can see we almost tapped this today. This is a monumental level of resistance for the total cryptocurrency market cap. So we're basically at the exact same point as we were a couple of weeks ago. A couple of weeks ago, we highlighted we were breaking down on Bitcoin and the total cryptocurrency market cap from this monumental level of resistance. If we're looking at the weekly, you can see we broke to the downside of this. We're kind of just retesting some of these regions right now. So in the higher time frames, my bearish outlook on the markets hasn't changed. We are literally right back at the exact same resistance a few weeks later. The total cryptocurrency market cap has resistance on the 618 Fibonacci at 1.22 trillion, and we are also running into resistance at 1.13 trillion. Now, like I said, in the lower time frames, things are different. We are leaning short-term bullish. The charts are definitely telling us that we have broken this most recent bearish downtrend to the upside. However, in terms of the altcoin market, I don't think anything's changed. We're seeing a huge push up today and this week on the Bitcoin dominance, and altcoins are really not moving up too much. Now, I have just recorded an update for Cadena. Cadena's really being a market outlier right now, taking a huge tear to the upside. But in terms of altcoins aren't really doing too much. We have had, like I said, we closed underneath this resistance and we just pivoted right back up to the upside. So against all odds, like I said, all of the charts we were looking at were looking bearish, and we just decided to revert to the upside. That's the way it is. Can't be right about absolutely everything in these markets. Nonetheless, in the immediate short term, against all odds, it looks like these markets are moving higher. But the altcoin market is still underneath the weekly EMA ribbons. It's still underneath the bull market support bands. It's still underneath the 200-week moving average, which is looking like it's approaching a critical retest right now. The 200-week is round about 552 billion. So altcoins are still very much in the danger zone while the Bitcoin dominance tears up. So in the immediate short term, I still lean bearish on altcoins, but Bitcoin looks like it's pushing up to these price targets of 30,000 and 31,000, like I just told you. Now, if we come over to the higher time frames, has anything changed? Well, before we talk about what I'd need to see to pivot bullish again on Bitcoin and think that we're breaking into a new bull market, I want to play the devil's advocate and look at two different indicators which are contrary to this opinion. Now, we were previously looking at the MACD and we were looking at what happens when you have these bearish flips on the MACD, but I want to flip this chart on its head and I want to talk about the quote-unquote bullish flips on the MACD. Now, obviously, when you're in a bull market and you see a bullish flip on the MACD, that is definitely a sign that you're going to get a huge rally to the upside. However, a lot of the time when you're in a bear market, MACD flips to the upside are really a lagging indicator, and they're kind of letting you know, hey, the MACD is saying we're bullish now, but because we're in a bear market, you know, this is a sign that we're overbought, and this is when we come back down to the downside. So if we're looking at where Bitcoin topped out at 69,000, you can see the MACD was bullish. We flipped bearish. If we look at the first quote-unquote bullish MACD flip, when the histogram ticked into green and the short-term moving average crossed underneath the long-term moving average, we actually saw this, once again, quote-unquote bullish flip on the MACD was actually calling for an overextension in the price action, and the price dropped 61.5%. The next time the MACD flipped bullish was right here, and you can see that we proceeded to break down about 38% to the downside. Now, if we zoom into the MACD right now, you can see we are almost completely flat and neutral on the histogram bars. So if Bitcoin pushes up to the price target we just mentioned, up at 31,000, where I think we're moving to in the immediate short term, then this week the MACD could flip quote-unquote bullish, and this is where Bitcoin has a decision to make, and this is what I want to tie in just one moment to what I'd need to see to become a Bitcoin bull and think that Bitcoin's going to go to 100,000 again. But before we do that, daily time frame, stochastic RSI is once again absolutely overextended. We're at 100 right now, and basically if you look at previous tops over in the stochastic RSI, pretty much every single time you come up to these 100 marks, it marks a local top in the market, and we are once again approaching this 100 line on the stochastic RSI. So at least in the immediate short term, I find it very hard to believe that Bitcoin could exceed 31,000 to the upside. The real bear market resistance where it finally tops out and where I'd have to start moving away from my bearish outlook on the market is when we break above this bear market resistance at 32,400. But like I said, 31,000 in the immediate short term, this is my price target for Bitcoin. I don't really see us going higher than this. If we do, 32,400 is a possibility, but we'll talk about that in the next video if we do manage to come up to 31,000. Once again, stochastic RSI on the daily is topping out, and we're very close to seeing a cross to the upside for the MACD. And once again, in bear markets, typically when you see these bullish crosses on the MACD, these actually mark local tops, and then you see significant drawdowns in the price action. But what would I need to see in these charts to say, okay, maybe I was wrong, maybe the bear market lows are in, and maybe we're moving into a new bull market? Well, first of all, we'll tie it into this chart. Like we said, when you're in a bear market, these MACD crosses to the upside mark local tops. When you have moved from a bear market into a bull market and you start to see these bullish MACD crosses, like for example over here, this is when you actually start to see that you move into a bull market phase. So if we flip bullish on the MACD and we start to tear through 31,000, we start to push up to 32,400, we exceed 32,400, back test it on the weekly time frame and hold 32,400 as support, I will be moving into a bullish stance on the markets. We will start to become Bitcoin bulls once again and think Bitcoin is moving up to much higher price targets. In the macro, unless this happens, nothing has changed. Like we've been detailing over in our charts, this is the most important level of resistance for Bitcoin. If we clear up a few different things that are plaguing this chart right now and keep it very nice and simple, this was support all at the top of the bull market between 32,400 down to 28,000. We backtested this many times. There's many different trend lines and touch points you can draw on this chart, but I've just amalgamated it into this big orange and red support and resistance zone. We've came down arguably even up to as high as 33,000, but really if we start pushing up that high, obviously something has monumentally changed in the charts. This was support all throughout the top of the bull market. We broke down and we found resistance at 31,000 right here. Now, we still aren't quite at 31,000. In terms of the macro, this could potentially still end up being a lower high, even though I think Bitcoin pushes up to 31,000 in the immediate short term. Of course, in the immediate short term before that though, 30,000 is this next level of resistance that we do have our eyes on. What I would need to see, once again, to become a Bitcoin bull and think that the bottom is in, is to see this flip of 32,400 and a weekly candle body close above it. If that does happen, Bitcoin could potentially take a huge rally to the upside. I also do want to talk about one worrying signal for the bears is the fact that the weekly stochastic RSI is now starting to turn bullish. And when we've seen these weekly bottoms in the stochastic RSI, these have normally called for sharp rallies in the Bitcoin price action. So in the macro, I do still proceed to believe that we are in a bear market, and this is going to be a top that is developing and we're going to move to the downside very soon. But once again, I do want to let you know we can play both sides of these markets. If I am wrong, then this is what I need to see to become a Bitcoin bull again. A flip, a bullish flip, a close, a retest, and a impulse to the upside of 32,400. If that does happen, I will be leaning bullish on Bitcoin. Now, before we do move on to the final segment of today's video and talk about some divergences which are happening in the market, I do want to let you know that we can play both sides of these markets. If we do push up to 31,000 and I start to see signs that this is the local top, we can play from a position of strength and we can look for that next short from a position of strength. However, if we do manage to flip above 32,400, this is what I've kind of been preparing you of in the past year or so on the channel, that we can play both sides of the markets. Remember, in these markets, you can play both sides. Bulls make money, bears make money, and pigs get slaughtered. 7 months ago on the channel, we uploaded this video, Bitcoin Time to DCA, and in this video, we detailed that we were DCAing. This is confirmed. If you want to go check out this video, you can. It's called Bitcoin Time to DCA. We posted tweets letting you know that we were buying at 17,000 and 16,000. If we look over on these charts, you can see I tweeted out we were buying the bottom. When we hit 30,000, we were selling the top. We can still make money on the ebbs and flows of these markets. And in terms of our Bitcoin DCA plan, if you have been keeping up to date with the channel, we only started DCAing at 25,000 and we started heavily buying once we hit these orange lines down here at 17,000 and 16,000. So our average DCA prices for Bitcoin are still around about 18,000 throughout the majority of this bear market. We're still doing a lot better than the majority of crypto YouTubers who have been DCAing at 50, 45, 40, 30, etc. Most of these people are still under the water, and we've got our average DCA prices all the way down here at 18,000 or so. Remember, we started heavily buying at 17,000, 16,000. We sold at 30,000 for that reversion to the mean. And if we do manage to have that impulse above 32,400 and we do end up pivoting short-term bullish and we end up DCAing at these higher price targets round about 32,000, remember our average buy-in price is around about 20,000. That is an amazing average DCA price. If you are looking to sell at 100,000, 150,000 into the next Bitcoin bull run, remember, Bulls make money, bears make money, pigs get slaughtered. This is what I've been telling you for the past few months. We are in a good position either way. If we revert up to 31,000 and start breaking down, we could look for another trade from a position of strength. If we break above 32,500, our average buy-in prices are all the way down here, and our DCAs are still very, very strong for Bitcoin. So wrapping up on the video, I want to talk about some divergences which are happening, and this is really why I still believe that Bitcoin is looking to make one last bear market low before we are ready for the next bull run. So first of all, we've talked about on the channel how the S&P 500 and of course in tandem, Bitcoin and the options market are in disagreement. Now, a lot of people say the markets are always right, but this can't be 100% true because there are lots of different markets. For example, on this chart over here, we're looking at the S&P 500, and remember, Bitcoin follows the ebbs and flows of the S&P 500. So when the S&P 500 breaks higher, but the options put to call ratio, when the put to call ratio goes extremely high, this kind of means that the options market is bearish. If the S&P 500 continues to the upside, people will say, well, the markets are always right, but that can't be true because we've got two different markets that are in disagreement with each other. And right now we're seeing the put to call ratio extremely high for the options market, but the S&P 500 and Bitcoin are in disagreements with these markets. So the options market is bearish, but Bitcoin is in disagreement with this. The bond market is bearish, but Bitcoin is also in disagreement with this. So once again, these markets can't always be right. One market has to be wrong. If we're looking at the iShares TIP ETF, normally we compare this with the S&P 500, but in this video today, we're going to look at it in terms of Bitcoin. Now, if we look at the ebbs and flows of the iShares TIP ETF and Bitcoin, you can see, the iShares TIP ETF tops out, like a month later, Bitcoin tops out. iShares TIP ETF tops out the same week Bitcoin tops out. iShares TIP ETF tops out 2 weeks later, Bitcoin tops out. iShares TIP ETF tops out 2 weeks later, Bitcoin tops out. iShares TIP ETF tops out right here. 1 week later, Bitcoin tops out. So we know that the bond market is a leading indicator for Bitcoin. And if we are drawing this bear flag, which is currently playing out in the TIP ETF, you can still see that the bond market is extremely bearish. We're at the bottom of the bear flag, and Bitcoin is diverging and moving to the top of this bear flag in the options market. And if we're looking at the put to call oscillator, this is just another way of looking at what's happening in the flows and options sentiment. You can see that we are heavily to the downside of the put to call oscillator right now. And if we clear up the chart and put some vertical rays over the put to call oscillator, what these vertical rays represent is when the put to call oscillator bottoms to the downside in green. You can see when the put to call oscillator bottoms, this is marked tops in the iShares TIP ETF. And as we've just seen a second ago, the iShares TIP ETF or the bond market is a leading indicator for Bitcoin. So typically when we see these bottoms in the green on the put to call oscillator, this is a sign that the iShares TIP ETF, Bitcoin and the S&P 500 should be rolling back down to the downside, but this is where we're seeing another divergence. This is beautifully played out almost every single time for Bitcoin, but you can see there have been a few times where the iShares TIP ETF tops out, the put to call oscillator bottoms out, but Bitcoin continues a rally for another 2 weeks over here. Bitcoin continued a rally for another 2 weeks over here. Bitcoin topped out here, Bitcoin topped out here, but once again, we're seeing another divergence which is happening where the put to call is topping out, the iShares TIP ETF is breaking down, the bond market is bearish, and Bitcoin is diverging. Bitcoin is not just diverging from the bond market, it's diverging from the options market, and we're not really seeing the global market liquidity or the volume required to have a significant breakout to the upside right now. This massive breakup to the upside is really happening because there's extremely low trading volume, there's extremely low liquidity. We saw this quite recently where Bitcoin's trading volume on Binance was the lowest in the past 8 months. In fact, if we pull up the volume over on Bitcoin right now, you can see, when we've had these monumental rallies before, they're typically supported by lots of volume coming into the markets. Right now, we're seeing a absolute monumental downtrend in terms of the volume. We're seeing a lack of liquidity, and because we're seeing a lack of liquidity, a small amount of volume goes a long way for Bitcoin, but that works to the downside as well. If we revert into this resistance and we see some selling volume come in, then this could have the exact same effect for Bitcoin, but to the downside, and we may see a sharp reversal come very, very soon. So that's all I've got today, my friends. Like I said, in the immediate short term, Bitcoin looks like it's moving up to 30,000. If we do manage to get continuation from 30,000, then the next price target I've got is all the way up here at 31,000. That is personally where I think Bitcoin is coming in the immediate short term. If we do manage to clear that, there is 32,400, and we will have to keep you updated, of course. We'll let you know on the channel when I think we're topping out. But in the immediate short term, like I said, we were wrong about this most recent break to the downside. Against all odds, Bitcoin broke to the downside, had a swing failure pattern, and reversed back up to the upside. It is what it is. We can't be right about absolutely everything in these markets. In the higher time frames, really not too much has changed for me, but in case we do get continuation, I've outlined exactly what I need to see to become a Bitcoin bull and think Bitcoin's moving to 100,000 in the immediate short term. So for today, my friends, that's all I've got. I'll keep you up to date in the immediate short term, 31,000. If we exceed that level, I will post a new update and we'll talk about, can we move up to 32,400 in the immediate short term. That's all I've got for this video, my friends. As always, if you do enjoy the content, make sure to let me know down below by leaving a like and a comment. Share the videos with your friends. If you want to further support the channel, feel free to click the join button and become a member today. Follow me over on Twitter at 618_cowboy. It's been your boy Cowboy Trades. I'm out. Peace.